Here's the good news. So Jed Ellithorpe reminded me this morning that things could be way worse. You could own a Blockbuster store. You might have an investment in the Kodak company. You might have a job selling fax machines, something like that. The good news is we are all in the one way, shape, or form in the food production industry. Whether you grow potatoes, whether you process those potatoes, whether you are a supplier that fits in the supply chain with those potatoes. And the good news is that's not going away anytime soon. I've done an extensive research into the food industry, and by that I mean eating. And eating's not going to go away anytime soon, so that's the good news. You all produce that. Those things that I mentioned are all examples of technology that has gone by the wayside or become extinct. And as far as I can tell, in all my extensive research, food production and food processing and those kind of things and things that we do are not going to go away. So what I'm going to do here today is talk about the fresh market side of the industry. That's most of what United Potato Growers of America is engaged with our member base. We do touch on the other sectors, of course. The potato industry, as you all know, is very symbiotic. All the different segments of the industry spill into each other in different ways and affect each other in different ways. We focus on the fresh side for this exercise here this morning. And what I'm going to do is look at the fresh market overview, kind of a 10-year history in a lot of cases, what the supply-price relationship has been, and also kind of what the future looks like, what the future trends are in that regard. So I'll get started here with the yellow potato category. Many of you have been to this before, and as you know, this is usually where I start. One of the reasons is historically, or at least the last 10 years, this has been a great example of a tremendous growth area in the potato industry, which is somewhat uncommon as we go through this, but the yellow potato category has grown tremendously, certainly on a comparative basis in the last 10 years. However, there are some little bit of a change in those waters that we're going to look at here today. So first of all, this is a 10-year look at the supply, the shipment levels of yellow potatoes into the U.S. You can see the trend is decidedly in that upward direction up until about a year or two ago. And then last year, you remember at this conference, we talked about it. You know, are we reaching a little bit of a change point, an inflection point here? It flattened off right at the top there at 12.8 million hundredweight of yellow potatoes shipped. And the year that we're just experiencing now, our forecast right now is 12.5 million, so that's down a little bit. That's the first time. You can see there was a slight downturn in 2019, but just a short bobble there, but it came right back onto that growth trend that we had been experiencing. And so the question now becomes, where are we at in that progression? Have we reached, so to speak, that top rung of the ladder? We'll look at some more data and kind of talk through that a little bit. This is a distribution of where the yellow potatoes come from in the U.S. And you can see there it's pretty evenly distributed, relatively speaking. There's no like major dominant area that supplies yellow potatoes. Idaho is certainly growing in their supply. They're now the top state. Canada actually ships slightly more potatoes into the U.S. In the yellow category than Idaho ships, but it's very close. They're both right around that 18% spot. And you can see the rest of them. San Luis Valley, Red River Valley, of course, has been growing in yellows as well. Kern County, Florida. That's how the distribution lays out for that 12.5 million hundredweight that we expect to ship this year. This is what we call our trackers. We do this for all the varieties, and this is a look at the full year to date so far. So this is about 5 months or so worth since the beginning of the crop year, the beginning of August. And you can this is a weekly shipment number, so you can kind of see the trend and how it's going compared to last year, which is the dotted line, and that kind of shaded background is the 3-year average. The red line across the top, of course, is this year's shipment numbers. And you can see it was trending along pretty close to normal, pretty close to last year's numbers. We had a pretty big spike again at Thanksgiving time, that lead up to Thanksgiving. Just kind of makes you wonder, are yellows becoming a really big dominant player in that Thanksgiving market? It'll be interesting to see if that trend continues. Then you always have the bump up before the Christmas holiday as well. But the shipping patterns are running a little bit ahead of that 7.9% ahead of last year, as well as above the 3-year average. So based on what I just showed you in that chart prior, we have a little bit less total yellows to ship overall. So we're running a little bit ahead of the pace is what that would suggest for the remainder of the year. So we'll see how that plays out. Just kind of in terms of summary, kind of summarizing what I was just showing and talking about, the average 10-year compound annual growth rate for yellow supplies in the U.S. is 5.6%. Again, those of you that have seen these presentations in the past and here at the summit, remember that compound average growth rate a couple of years ago was as high as 9 to 10%. So that is tapering off just a little bit, but it still is positive on the overall growth rate. Now, compared to last year, just like I showed, it is down 2%. So it'll be interesting to see if that becomes further in the trend or where we go from here. But it is a little bit of one of those things we need to keep an eye on and say, you know, are we again reaching that top rung of the ladder? Demand has been stable, we believe. Pricing is still reasonable, albeit it is at lower levels than it has been in the recent few years. Just using, we don't have develop a GRI, so to speak, for the yellow category, but using tote A price as a proxy for that, it's in that $15 to $16 range right now. There is some more variability in that, but that's kind of probably an average. And again, like I mentioned earlier, there's no single geographic region that kind of dominates that market. The big players, the top 5, you can see there, Idaho was up 14% this year. So not only did they plant a few more acres in yellows, they also had big yields, which was across the board, but they did increase their production of yellows pretty significantly. San Luis Valley was down slightly, but pretty flat there. The Red River Valley also increased, and that's a trend that has been going on from really cannibalization of red acres into yellow acres. Now that has slowed some. 3 or 4 years ago, that was a pretty significant trend happening. It's still happening slightly, but not quite at the rate it was. But Red River Valley was up 9% in yellows as well. Kern County virtually flat. Florida significantly was down pretty substantially. So those areas are been some puts and takes, and that's why the overall is down slightly. Those top 5 regions produce almost 60% of the total yellows. And Canada, I don't know if Wayne's still here, if they were the 54th state in the ranking, they would actually be number 1. I tried to phrase that a little differently this year, but since Wayne brought that up, they do supply 18%, like I showed on that pie chart, of the total U.S. consumption. And so we would say for the yellow category, market volumes are somewhat stable right now. But again, have we reached that top rung of the ladder where there's some warning signs flashing saying we don't want to get into an oversupply situation in that category like has happened in other places. All right, let's shift gears and talk about red potatoes here for a minute. This is the 10-year trend on red potato shipments in the U.S. And you can see that's a very different kind of graph than we showed for yellow potatoes. And this is certainly in a downward trend. And last year we hit kind of our, I guess what you'd call the low point recently anyway. It kind of peaked. If I went back another 5 years before this, that peak did come back in the mid-2010s where we were hitting in that 15 to 16 million range. But since then it has been on a bit of a decline. There's puts and takes in that. Mostly because of variability in crop production, like in the Red River Valley, where they're dependent on Mother Nature. There's always some variability in yields there. But you can see we had a little bit of a bounce back this year. We're back up to about 11.5 million hundredweight that we believe is our forecast for red shipments this year. And here's what that pie chart looks like for the red category. The Red River Valley is still the largest shipper. by a pretty good margin. Canada number 2 there, Idaho, Skagit Valley, you can see the rest of them. That's kind of how the distribution lays out of red potato supply in the U.S. And this is the tracker for reds, and you can see again it's a little bit of a different story. We had been running most of the first couple months of the year, first few months of the year, below the average and below last year's numbers even. We caught up a little bit here in the recent run up to the holidays, but we're still down about 1.6% year over year and down about 11% compared to that 3-year average. So just like I showed, the red supply is up from last year. So this is the polar opposite of what happened in the yellows, where the supply was down, but our early shipments were up. These early shipments are down, and we do have a little more supply. So that would say that we have some more reds to take care of and to ship throughout the remainder of this crop year. This is kind of, again, the summary of that data. The average 10-year growth rate, compound average growth rate, is a negative 2.4%. And the major shifts from last year, there was really that increase of 1.4 million or whatever it was, came from most every place. Certainly the 5 largest producers, the Red River Valley, Idaho, Kern County, Wisconsin, they were up pretty significantly this year. Florida was flat in reds, and you heard me mention before they were down in yellows, so they were down overall pretty significantly. But Canada, they supply about 15% of the U.S. red supply. They would be number 2. On the pricing side of things, it's down certainly over last year, and it's also down versus the 5-year average. So there's a headwind or two in that red category, like I showed. But current pricing is in that $16 range. That's probably a little generous right now, even, but it's certainly, there's some variability that goes along with that too. So this is just a slide I like to show because it shows kind of the juxtaposition of the trends between the red and yellow category. And for a long time, reds were very much more dominant than yellows in terms of a specialty variety. But you can see that trend flipped in 2022, where they're about the same. And since then, yellows have been more than the red shipments. That has been arrested a little bit with that slight decline in yellows and the increase in reds this year, but the trend line would still suggest that could continue. All right, now shifting gears to what may be slightly more depressing, but again, I'll talk about some good news too. But the russet category, let's go through this. These are the fresh russet shipments, total U.S. over the last 10 years, and you can see how that trend lays out. Funny enough, it's a supply and demand situation, and so if I put a pricing chart along with this, which I do in some cases, but you would see that the very good prices and the very good returns we got were in the 21 and the 22 crop. Since then, not so much. The past 2 years, 23 and 24, were, I wouldn't say they were horrible, but they were certainly not great. And so in many cases, it was below the cost of production even in those 2 years. This year came along, and we're now projecting 71.7 million hundredweight. We'll just call that 72 for round numbers right now, is what we expect russet-wise to ship in the U.S. You can see that that's the highest russet shipments that we will have since 10 years ago. 2016 was the last time we shipped over that amount. And a lot of things have changed in the dynamics of the fresh market and shifts in consumer preferences and all those kind of things. So even comparing it back to that is sometimes a little bit challenging just because of all those changes. But that's where we're at right now with that 72 million. And here's how it breaks down by shipment area. You can see there's one very dominant player in that category. That's Idaho, almost 50%. And that's somewhat typical. It does vary sometimes between 44, 45% to the high 40s, but this year Idaho, like most areas though, had a very good crop, so it's right in that average range where they've been at. San Luis Valley in Colorado is by far and away the number 2 russet shipper at 17%, and then Wisconsin and the Columbia Basin are the other 2 kind of major russet shippers. So between those big 4 areas, they make up, in a typical year, is between 80 and 85% of the total shipments. All right, this is a little bit busier slide than those trends that I showed you for reds and yellows, but there's a little bit more information here, so bear with me on this one. This is weekly shipment levels. Each bar represents a weekly shipment number, and the dotted line across the top is last year's shipment levels. The bars are the current year shipment levels. To date, through the end of December, those are actuals, and going forward, that's our projection for the rest of the year based on that total number I showed you of russets that we have to ship in the U.S. this year. The other two lines are the grower return index averaged. It's the total weighted GRI between those four major russet shipping areas, like I mentioned, Columbia Basin, Wisconsin, Colorado, and Idaho. So that's a weighted GRI that's a pretty good reflection of the total overall market return. That green line is last year's number, which again I said was kind of marginally okay, but not great by any stretch, certainly below the cost of production in a lot of areas. And that line is well above where we're at this year, and you can see the supply situation. To date, we've shipped about on pace with last year, slightly below. Idaho has been shipping very hard, some of the other areas a little bit less so, and so that's why it kind of comes out to that. But going forward, anytime you see those bars kind of stretching above the three-year average and above last year, that means we have to continue to ship pretty hard to move this crop and meet those projections on the shipment numbers that I showed you earlier. So the casualty in this, of course, is the grower return, and that red line has trended down through the harvest window in the early part of the storage season to where it is now. It's somewhat stabilized. Some people say, well, hell, it can't go any lower, but that's kind of where it's at right now. It's down in that 409 range, I think, between 4 and 4 1/4, somewhere in there. I have it on the next slide. I'll show it, but. This is kind of what I wanted to get to, because we developed this graphical representation of a curve that kind of represents supply and demand. So on the left side of the graph, you have the grower return index average by those four areas for that particular year. And then on the bottom axis, you have the shipment levels for that year and how they correlate and how they correspond. And from that last 10 years or 11 years worth of data that we have on this chart, you can develop that line. And so with that line, what we would say is this. This is the total U.S. supply there across the bottom. There's that almost 72 million that I mentioned to you right there with that dot. That's our shipment levels right now, projected. And the average grower return index to date, so far, the weighted average is at that level, 409. It's right there. You can see it's even a little bit below what our curve would actually suggest that it should be or could be at this time. Don't get me wrong, this curve is not perfect, but it does certainly suggest where the market can be and is in a lot of cases. The balance line is what I'm showing with that those other arrows right here. The cost of production, what we're saying, is at $12.35 per hundredweight. That's a new cost of production estimate number, and our thanks to Ben Eborn for providing that. He does the cost of production for Idaho every year. That's the new projection for the 2025 crop. And that's up slightly from last year, but I'll show another slide here in a minute. It's been fairly stable over the last, or relatively speaking, stable over the last couple of years. But if you say that's where it is, and don't get hung up on that absolute number. Every grower is going to be different, obviously. Every region's got some nuances to it and is going to be different in some ways. So use that as a trend indicator more than anything, not an absolute number. That's exactly where cost of production is. But that is for fumigated ground in eastern Idaho and the southern region of eastern Idaho. It's for potatoes that are shrunk and stored into February and all the costs associated with that. And then as well, it includes ownership cost, finance cost, all those kind of things, opportunity cost if you own your land, that kind of stuff. So it's an all-in number, but let's just use that for a reference point. And you can see the difference between that dot and that line right there is Well, it's pretty significant on the GRI return size. So between $4 up to that $12, that's the difference between a grower's even break even and what the market is producing in return right now. And the point I'm making with this is that the russet potato supply market is very inelastic, and by that I mean very small relative changes in the supply side of the equation impact very much larger changes in the grower's return side of the equation. And so you can see that played out here. That's only about 6 million sacks or so that you would say were off. And if we had that 6 million sacks out of the way, could we get back to that line right there? Probably. That's what our curve would suggest, back to a break-even point. So for an $8 almost roughly differential there on the return side of the equation, you can see that's only 6 million out of 72 on the supply side of that equation. So that's really what we're trying to demonstrate with this. If all those potatoes were sold in, and this is based on open market again, so again, this is not absolute, because we all know that there's all the contracts that are out there and those kind of things, and hopefully those contracts are better right now than the open price. It obviously shifts from year to year based on what the return is, where they are relative to that. But if all the potatoes were sold on the open market, if some grower did have all this potatoes exposed to the open market, and you multiplied it, that differential right here, by that total shipment numbers, it comes out to a number almost hitting $600 million that is being affected out of the grower's return pile, so to speak, and below the cost of production. So that's really what you would call a loss. Now, again, that's not absolute because of the contracts involved, but and each region has some variability in how much they're contracted, but it is a significant number, I guess, is the point. And so the headwinds and the challenges are very real, and that's how it's looking right now. What's one of the things that you can do when you have an oversupply situation such as this? One of the things is you can promote, and that has obviously somewhat of a limited effect, but it does have a positive effect. So promotion is a pretty big deal, and so I like to show this slide because it kind of demonstrates, if I can get it to turn here. There we go. I like to show this slide for a couple reasons. One, it does demonstrate that we are promoting heavily the russet potato category in the U.S. right now. This chart shows if you took a $1 bill into your local grocery store, your local Safeway or Kroger store, how many pounds of each of these specially cropped commodities could you come out of the store with? And you can see the list of them down there. At this point in time, when we ran this, we do this by week. We take the USDA promoted ad data for all these, including potatoes. But at this point in time, the end of the week after Christmas, you could have gotten almost 2.5 pounds of potatoes for that $1 based on the promoted price. So Kim talks about this, how in Potatoes USA, potatoes are America's favorite vegetable. They absolutely are, but they're also one of America's most affordable vegetables, is what I like to say with this as well. So, but the other thing this does demonstrate is that it is being promoted heavily, which is helping hopefully to move this crop, and it is to some degree. But you can see yellow and reds are also near the top of that chart, so they're also of very good value and being promoted well also. All right, let's talk a little bit about next year, or this current year that we're in, the 2026 outlook, how it's going to finish, as well as what the intentions are for next crop year. That's always of some interest. And again, my thanks to Ben Eborn and North American Potato Market News. They've helped us develop these slides that feed into a model that would suggest what the acreage changes could be for the coming year. Alternative crop prices play a big role in that, particularly wheat, especially for Idaho. So the things that go into that model are this, the Idaho Grower Return Index, and it's changed from year to year for that October through December time period when growers are looking at the future, making planning decisions, all those kind of things. And then the rest of those ag commodities that are alternative crops for potatoes or crop rotation commodities with potatoes, you can see those there. wheat, barley, alfalfa, corn, and soybeans. So the commodities that are alternative to potatoes are all down a little bit. I wouldn't say they're down at any great scale. Last year when we looked at this, they were down significantly more, so they're a little more stable, but again, they've been challenged for a while too, just like Stephen was showing in his presentation, and this kind of bears that out. But wheat's down 12% right now. The Idaho GRI on the flip side of that is down almost 60%, so that's pretty significant, and the model will take that into account. So I'll mention here in a minute how that shows out. The other things that go into how a grower thinks about his upcoming year and planting decisions and those kind of things are things like cost of production. I showed you on that previous slide where it currently is at that 1235 level for this current crop for that eastern Idaho region. And that's up a little bit from last year. The last couple of years have been down slightly from prior years, but again, it's been a little bit more stable, I guess you'd call it at the top. Now, don't get me wrong, there's puts and takes within that, whether it's fuel or fertilizer or labor or other input costs in different regions. So there are some puts and takes certainly, but again, use this as a directional trend and a more of a directional number than any absolute number. But it does show a little bit of a spike back up, but only like 10, 11 cents. So the big spike came back in the inflationary times, just as Stephen showed us earlier back in that 21, 22 time period. All right, so how do all these things kind of fit together? So we had weak, but somewhat similar to the prior year on alternative crops. Particularly wheat, you saw it down only 12%. So if a grower's looking at that saying, well, that might be somewhat better than a very weak Idaho GRI for that time period, which is down almost 6%. So you have that little bit of yin and yang there. Cost of production, like I mentioned, factors into things certainly. Then that's flattened, but it's slightly higher this current year. Other things that go into that, seed supply. Depending on the year, there's a lot of times talk about that, and in the end of it all, it never usually affects a lot of things, but water supply is kind of like that as well. But water supply is definitely something to keep an eye on, particularly in Idaho right now and in Colorado, maybe even more so. So we know about the challenging year, and just like Dan mentioned, all the skiers are not very happy, but we'll see how it plays out. Things can change pretty suddenly, and we might have a very late season push on water and snow levels. We'll see. Crop rotations, of course, play into things wherever a grower's at in his rotational practices. So when we kind of look at those things all on the kind of the top of this, or the model would suggest, I don't have this on the screen, but the model would suggest that there would be an acreage decline across the entire U.S., as you might expect when you have that weak of a grower return index, and some alternative crops are actually a little more balanced. They're still down somewhat, but more balanced certainly than the potato side of things. It would suggest anywhere from a 4 to 5% decrease in total acres. Even if we got that, I'm not sure that would be quite enough, because all these other factors come to bear on what's happening within the market. Things like the processing situation, and we had a great presentation from Dan, and really demonstrated some of the variabilities and the changes there. But we've seen some shifts in demand, and some of that variability across not only the different sectors, whether it's food service or retail, or the different processors, the major processors in North America. And then there's that global competition landscape. Cedric did a great job of showing that, as well as Dan, and that's a real thing. When you look at what's happening in China and that growth and what they're able to do now at a lower price, and what's happening out of India, there are dramatic increases just within the last 4 to 5 years. It's pretty significant and pretty eye-opening. And there's other areas. The European Union, although they face a lot of the same challenges, it's a big deal there too, because as we know and just heard from Cedric, they certainly have a big crop as well in this particular year. So all those things factor together and provide that processing situation that growers absolutely have to keep an eye on and understand and strategize for. The last couple of years, there's been rationalization of excess raw material by some of the major frozen processors where they just couldn't take anymore, and some, in fact, paid for some potatoes that they just didn't take, and they had to rationalize that excess raw material. Contract pricing plays into this. We know what's happened a year ago. It all hasn't played out this year, but that contract pricing is something to keep an eye on, as that's dropped off a little bit from the highs that it reached 3 or 4 years ago. And then you have the dehydration sector and the processing side of things, and I would certainly say or suggest that there's some headwinds there. Whether that be foot traffic in center of store at the retail level, whether that's some shifts in the dynamics of the food service sector, whether that's higher inventories than some companies may desire. So all those kind of things are kind of factoring into the dehy sector as well. So challenges to go around, I guess I would say. And there's other external market factors that play into this. International markets access, the access that we gained to Mexico, of course, was a great boon for the industry, and that really helped a lot. And that got to a great level after it first opened. I can't even remember now if it was like 3 years ago, I think, is when we first had access to the full country, not just the 26K zone. And so that's been great. And we continue to work on Japan as the next large challenge in that arena. And that could be as much as the Mexican opportunity is in terms of total value of fresh exports that we can get into Japan if we could open that market. But there continues to be some challenges with that, and that's a slow process and continues to be. But we have optimism and some hope that we'll get there. Ag labor uncertainties continue to be a factor. You heard a lot of the folks up here on the panel talk about the tariffs and things like that. So there's other external market factors that absolutely come to bear on the market, and how a grower has to take all these things into account and factor all these things in as he's making planning decisions and really strategizing for his best way to go about planting potatoes and saying to himself, should I plant that extra circle or that extra corner of potatoes, and really trying to balance that supply and demand equation. Because that's really what it's all about, and that's our goal at United America, is to help growers have the best information, the best market intel to make those strategic decisions to balance the supply and demand equation, because that's what it all comes down to. I showed that chart earlier that showed, I didn't point it out, but I showed the dot from back in that 2022 crop, and that was about a record, about as high as the average GRI has ever been. It was over $22, and that was awesome. Growers made a lot of money that year. But was that healthy for the industry long term? I'm not sure, because that wasn't in balance either. Obviously, we'd prefer a long-term solution where there was in balance every year in and year out, to where a grower not only got his cost of production back for all the blood, sweat, and tears that a potato grower puts into a crop, he very much deserves a positive margin as well. So whether you say that's 10 or 15, 20%, whatever it is, that should be on top of that cost of production, actually. So that's the goal, is to get those things in balance. But in the meantime, I'll leave you with this: the market will absolutely value the crop consistent, in this case with other oversupplies years, and that's exactly what we're seeing. So keep all these things in mind as you enter your planting season in this upcoming year. But I will end there and just thank you very much for your attention and attending this morning. I have a few other things I'll go through, but just wanted to thank you all very much for attending this morning.